All right, the Glass Granny, let me hear how this went. I ran my show with lower starts and did very well for a 30-minute show. Got more followers. All to jive. Hello, JK Flips. All right, so let's just jump into it. Let's talk about what we're going to talk about, because we usually only do maybe about an hour on Friday nights, just depending on how many questions there are. So resale, you have a resale certificate. But let's talk about like the actual type of taxes. So we have 3 kinds of taxes that we think about on a regular basis as somebody who's selling. Federal income tax, so that's your IRS, what you pay once a year, or you may pay quarterly, but that's your federal income tax. That's not what we're talking about tonight. That's normally what we talk about, not tonight. Then you have state tax. State tax is like federal tax, but you're paying it to the state. All but 5 states have state tax. That's not what we're talking about tonight. We're going to talk about sales tax. Normally on Whatnot, sales tax is not something that we think about a lot because Whatnot handles it for us. It's one of the beautiful things about being on this platform. eBay, Poshmark, all the other platforms to handle your sales tax too. But we just do our thing. Whatnot collects a sales tax. Whatnot remits it. It's not something we have to even think about. However, we do need to think about the sales tax when we're talking about what we're purchasing and us not paying the sales tax. So before we get there, hold on. I took some notes. I have some stats here that I thought were pretty interesting on sales tax. And I do not know what happened to it. Goodness gracious. Some of my notes disappeared. Oh, here they are. I don't normally type my notes, but I'm trying something new. Okay, JK Flips, hope you have a wonderful show. And maybe you can come back. That would be awesome. Or maybe we can raid you. Who knows? We'll see what happens, right? So, your resale certificate comes from your state. He's messing with my computers. Your resale certificate comes from the state you live in. And every single state has different rules. So what we're looking at is you apply through your state. The state says, yeah, sure, you're going to resell. Here's your resale certificate. That means that you as a intermediary, as the middleman, do not need to pay sales tax on the items that you purchase to resell. Think about if you did do it. So if you are paying sales tax on it, you buy the items, you pay your sales tax, then you sell it to somebody else, they pay their sales tax. Maybe they sell it to somebody else, then that person pays sales tax. So you can have one item be taxed multiple times over and over every single time it's sold. Having you as the reseller not pay those taxes, it's like you're the middleman, kind of cuts it out a little bit. Kentucky's resale certificate is weird. It's literally a piece of paper that you print out and fill out yourself. So interesting. So every state has different rules. So I love to hear about some of the other states. Do you not register, like you fill out the piece of paper and send it into them to get your resale number? Or how does that work? Let me know. I love discounts. The states that I have direct experience with the resale with, you go online, you fill out all the information they want. They usually online is they issue you a resale number, and then that's your number. Sometimes they'll send you a certificate in the mail. This is not a DBA. So a DBA is doing business as. That's a legal classification, just saying, hey, here's a fake name I'm doing business as. It is something that you register with your state for also, your DBA. But that's different than a resale certificate. A resale certificate allows you to purchase items for resale without paying the sales tax on those items. You do register, but then each wholesaler needs a copy of it. You print it out for the copy. Okay, that makes sense. Here in Pennsylvania, you do not have to supply people with an actual copy of your resale certificate, just the number. So I keep the number on my phone. When I go shopping at a new place, I say, hey, I have a resale certificate so that I do not need to pay taxes. They say, what's the number? Sometimes they'll ask your name and address to verify the information with the state. So let's talk a little bit about why. So the why was to avoid that double taxation. Without a resale, we said without the resale certificate, you pay tax, your buyer pays tax, the next person pays tax. We want to avoid that. Why pay more tax than we need to? Looked it up, and it says for Texas, I need a Texas sales and use tax permit, which makes sense. Sales and use tax is another name for a resale certificate. And every state is a little bit different in the sense of maybe the actual name they use and also the requirements on if you need to file quarterly reports, annual reports. Every state is a little bit different. So you really do need to go on to your state's website and understand your responsibilities. You do not need to be an LLC. You, as a sole proprietor, you would qualify for a resale certificate. There is no state that I'm aware of that requires you to be an LLC. Hello, Dragonfly. So, let me get in and kind of tell you some interesting facts about this. I thought this was really interesting. So most of you already know this. Every single state has a different sales tax amount. I did a little research. The average sales tax across the whole United States is 7.53%. So about 7.5%. Some states are higher, which I'm going to tell you the highest. Some states are lower. On average, sales tax is about 7.5%. Are you talking about buying supplies or items from thrift stores? Not supplies, items for resale. We're about to talk about qualifying purchases. So items for resale, when you're going to resell something, that item you're going to sell to somebody else, you don't have to pay tax on it when you get your resale certificate. Yes, so the reasons why you should have a resale certificate is to save you from paying tax. Let me give you an example. Sales tax on the items you're about to resell. Let me give you an example here. I just said the average sales tax is 7.5% across the United States. Okay. If you spent $500 a week on inventory, on items that you buy that you're going to resell, let's just say $500 a week so we can do some easy math. $500 a week times 52 weeks in a year is about $26,000 of inventory. Okay. For some of you, 500 may be low, some of you it may be high, but the rate is going with it. If you spend $26,000 a year on inventory and the average sales tax rate is 7.5%, that's $1,900, almost $2,000 in savings. That if you do not have a resale certificate, you are spending approximately $2,000 more than you need to be spending. I would rather take that $2,000 and buy more inventory with it, or buy something my business needs, or keep the money in my bank than spend it needlessly on sales tax. So if you spend less than that on inventory, if you spend $100 a week, you can do the math in your head and figure out about how much you would save on an annual basis. And now think about it. It adds up really quick, doesn't it, Southern Charm? The top 3 highest sales tax states, because every state is different. So let me just give you some examples depending on where you live, because I know on Whatnot we come from all over, right? So the highest sales tax state, Louisiana sales tax is 10.11%. 10%. Tennessee is 9.61%, and Washington is 9.51%. Those are our 3 highest. Illinois says I have to register as a business to get an ID number first. So when you're saying ID number, what kind of number are they talking about? Are they talking about an EIN? Because that's through the federal government. That's an IRS number. Who knows? It's Illinois. Okay. You should not have to register as a business in order to get a sales tax exempt. Livy, though, I will take a look at Illinois and see if I can find anything out for you too. Let me just write that down. Livy will. Okay. So I'll see if I can find anything out and let you know. An FEIN is a federal employer identification number. As a sole proprietor, you do not on like normal basis need an EIN number. FEIN number is like a social security number for your business. If you're an LLC, if you incorporate, if you create another legal entity, you absolutely have to have an EIN. As a sole proprietor, if you're going to hire employees, or if you have contractors that you're paying, you may want to get an EIN. And that's only because you don't want your social security number on the tax forms that you have to give those people. Other than that, there's very, very little reasons why, as a sole proprietor, you would need an EIN number. I would reach out to your local state office. They can probably, yes, absolutely. It's all in the state offices, and most of this information is all online. I would be hard pressed to think that there's any state that you can't apply online for your sales tax exempt at this point. So we talked about the 3 highest, the 3 lowest. There's actually 5 states that have 0 sales tax. Did you guys know that? I didn't know that until I looked this up. I knew there were states that had zero state tax, but there are 5 states that have zero sales tax. That means my sales tax here in Pennsylvania, goodness, I don't even know what it is, 7-8%, they have zero. Illinois is not one of them. No, it is Alaska, Delaware, Montana, New Hampshire, and Oregon. Those states have no sales tax. However, Alaska, for instance, will have locality or municipality taxes. So this is the other thing you've got to think of. It's not just your state tax. Most states will have a flat amount, and then the county or the locality you live in usually has an additional amount of sales tax that they add on to the state amount. Your sales tax exempt certificate, your resale certificate, exempts you from both your state and your locality when you get that. In Florida, that was really big. I know I used to live in Jacksonville, Florida, and I forget the exact numbers off the top of my head. But Duval County in Florida, it was like an extra 0.5 or 1% of sales tax on top of what the state would charge. So that's 7.5. Total tax in Chicago is 30% for sales tax or for state tax. That's crazy high for sales tax, 30%. We just looked at the top 3, and that's way higher than the top 3. So you have to be talking about state tax. Okay, so all 3 mixed together. Okay, so if you're mixing a bunch of different taxes, sales tax is closer to 10%. That's correct. Okay. So in the state of Georgia, you register with Georgia for sales and use tax number, and then you can print your certificate for resale. There you go. And that's a normal process in most states. So now that we know how much money we can save, I know if you don't have one yet, you're probably out there thinking, man, I need to go get this. I can save me some money on the sales tax I'm paying. But let's talk about what it qualifies for. Now, across the board, there may be little nuances in different states, but in general, all of the states, it only qualifies for the merchandise that you are going to resell. So if I buy vintage dishes, jewelry, whatever it is that I'm going to buy to resell, I would qualify to not pay the sales tax on that. The items you cannot, it does not qualify, stuff you still pay tax on, is anything you use or consume in your business. Boxes, bubble wrap, label printers. Those are, you're not buying to resell to somebody. You're buying that to use in your business. You still have to pay tax on those items. I have heard other people talk about, using your resale certificate. Oh, I go to Staples and give them my resale number so I don't have to pay tax. But that's not the case. That's not proper use of it. Guess if it's getting a resale, I can keep any. Guess if getting a resale certificate, I can't keep. Well, there you go. Yeah, K-pot. So you're a step ahead of me. So you need to think about that too. How many of us may go? That's why it's called a reseller certificate. A resale certificate is because you have to resell the stuff. That's what qualifies it. But how many of us may go to an antique store or a thrift store to buy stuff for resale, but we also at the same trip see something for ourselves that we want. We pick up something personal and we just throw it all on the counter and say, oh, I'm tax exempt. We have all done it at one time or another. We've all had something in the cart, not thinking about it, throw it all up there. However, we are not supposed to do that. Before you get to the register, never. We are supposed to separate our personal and our business items. So when you get up there, you're supposed to say, hey, we're not going to do that. We're not, this one's personal. The resale doesn't apply to this one. But think about this. How many times have you bought something to resell? Maybe you get it home, you're thinking about it, you've just changed your mind. You bought it with the intent of reselling. You were being honest. Yeah, eventually it gets there. But sometimes maybe you're being super honest and at the very beginning you're like, no, I'm going to resell this. Then you get it home and a week or two later you're like, no, I really like this. I'm going to keep this piece for myself. That's when our quarterly and or annual reporting, depending on your state requirements, comes into play. In those instances, those are things that you need to report and actually pay taxes on. Now, am I going to get down into nickel and diming and the state's going to get at me because I didn't pay 10 cents or 20 cents or 30 cents in tax? Probably not. Don't do it on a regular basis, though, is the kind of the main gist of that. Think of it, and when you think about what does and doesn't apply, A good analogy is think of it like a coupon. You could have a coupon and go to the store, and you have that coupon, you're going to get money off something, but it's only off specific products. That's how your resale certificate works. You don't pay taxes on specific things, the things that you're going to resell. Then you owe use tax when you file. That's it right there. You owe your use tax because you're not reselling, you're using the item. So the resale, it's based on trust, right? It's based on the people that you're buying from are trusting you, that you're being honest in your statements of saying, hey, I'm reselling this. Here's my number. So it really comes back down to the integrity of your business. So some of the common mistakes, personal purchases, we just talked about that. Maybe buying something and then giving it as a gift. Home decor you're keeping, furniture, holiday decorations. All of those things really aren't inventory. They're not things that we're going to resell. We've got to pay our taxes on those things. You'll buy. Okay. Let's see. Documentation. Let's talk about documentation. So now we know what we can and can't buy. We know how to get a resale certificate. We know how much money it's going to save us. We know what we can and can't do with it. Now, what do we have to do to keep records about this? Because nothing in business is just like do it and forget it. We always have to have documentation. We always got to have some type of paper trail with it. So just having the resale certificate in itself isn't enough. We've already heard from a couple different people who say, oh, you've got to print something out. Your state gives you something printed. Pennsylvania, as long as I have the number, they actually do give you a certificate. I don't carry it around with me. I keep the number in my phone. So depending on what state you are, you may actually have to have a certificate. Some vendors actually require you to fill out a form. Others, you'll go up to them and you'll say, hey, I've got a resale number. And they just take some information verbally, type it into their computers, and you're good. So it's a little bit different in every place you go when you're using it. And then for each state, some states are going to require you to do either quarterly, some monthly. That's pretty rare depending on if you have a high use tax. You keep getting asked to email it. That's interesting. And I'm not surprised. Like everybody is different. Even here in Pennsylvania, I've had some vendors that are like, here, I need you to fill out this form. And other ones are like, yeah, what's your name and address? Cool, you're good. So it really, what they're doing on the vendor side, the vendor side has to report that. They have a system that they can log into and match those up. But most of the time, they're just keeping it for their records. But what you should be doing is every time you make a sale, and this is no different, you are already doing this, so this isn't over and above. It's not more work that you need to do, but keeping your receipts, invoices, any statements you get, or if you're buying stuff with it really wouldn't apply there. FYI, your sales tax exempt statement is not always valid in all states. Correct. It is not always valid wherever you go. So that's a really good point. Most of us, though, tend to shop within our state. However, I live right on the border, so I do a lot of shopping in Maryland and Pennsylvania. So keep that in mind if you are living somewhere on like a border of a state. Or if you travel, maybe you're going to the 127. They don't normally charge you sales tax at garage sales or yard sales, but you may hit up some auction houses or thrift stores or something along your way. So keep that in mind. It doesn't hurt to always ask, though, for sure. When we're talking about our documentation, are you going to, I am so jealous. I wanted to go so bad this year, and it's with my work travel, it's just not going to happen. I had too much going on. There's no way I could take more time. There are so many people, this is all I'm hearing about is all the people going to the 127, and I am so incredibly jealous of everybody. When you're thinking of your documentation, it's no different than what you're already keeping for your bookkeeping. So just do the same thing. The whole thing is about if you're ever audited, you just want to be able to provide that documentation. So recording it in your books as soon as you can, putting it in your ledger, your computer accounting system, whatever you're using, your Excel sheet, whatever system you're using, making sure that you're recording it in a timely manner. Michigan all the way to Tennessee. I have heard, not that I've ever been, but I've heard from some people who go regularly that Kentucky and just south of Kentucky, so what would that be, Tennessee, is awesome. But too far down in Tennessee, I heard it doesn't get as good. I don't know. I'm not an expert by any means. Never been. But I've heard Kentucky's really good. So, how many of you, just curious, because this goes into bookkeeping and sales tax, How many of you probably right now have a receipt for something you purchased in your car or maybe in a book bag or the bottom of your purse? I'm guilty. I know if I go to my purse right now, I'm going to pull out a receipt or two. I just know it. I'm like burning up. I got to take the sweater off. Yep. So we want to think about, doing a little bit better with that, me included, of making sure we're recording our stuff the right way and putting those receipts somewhere safe. One of the tips I've heard, now I don't do this, this is just a tip that I've heard, it's not required, is to take pictures of everything and just file everything electronically. Set up 12 folders on your computer. Crystal's Vintage, thank you for bringing your friends over here.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
Crystals, please put in the chat who you are, what you sell, what you do, when your next show is, all those good things. And in the meantime, well, hello. Crystals is awesome. She is a vintage decor seller. She does some estate sale stuff, but mainly vintage decor. She also teaches CSV. She is also one of our Season 2 CEO Challenge participants, and she is amazing. And you all need to come watch her on Monday night for her finale of the CEO Challenge. A scanner that inputs everything. I love that. And I know QuickBooks has a built-in camera where you could take your picture of your receipt and it'll pull it right into your accounting system automatically. You are rating in with Crystal. Well, hello, welcome, Old River Trading. Was her show on CSV great today? That is so good. She teaches that really, really well. You guys, if you don't know how to use CSV, Crystal is super patient and will walk you through step by step by step. So definitely recommend. Yep, and there's our Monday night CEO challenge. So we were talking about, one of the tips I heard was to keep all of your receipts electronically. I kind of love that tip because you just set up 12 folders, you stick everything in there. You still need to record it in your accounting records. Old River, thank you. You still need to record it in your accounting records, but now you have it nice and easy and you don't have that shoebox full of receipts. Think it's a wonderful tip, one that I may start thinking about. We pay a company $400 a month to keep your books, worth every penny, and I probably would not disagree with that at all. Particularly, look, none of us, me maybe because I'm geeky and I'm an accountant like that, most of us are not here because we like bookkeeping. We're here to do what we love. We're here to sell the things that we love to sell. Paying somebody to keep your books, to have that information readily available to you, to get, I'm guessing his and her Chicago shop, you probably get some type of monthly reporting package so that you can look at it and analyze it and make good decisions based on your financials. $400 a month is a super reasonable price and well worth the ability to have all of those records done. You spend money, you send it over in whatever way your accountant wants, and it's given back to you in the form of reports. There's nothing better than that. 100% recommend that. As a business grows and you're like, look, I just don't want to spend time doing this. Think about the best, we always talk about the best and most efficient use of your time. You can spend an hour a week doing bookkeeping, or you can spend an hour a week doing another show, selling stuff, making yourself money, and let somebody else do that bookkeeping for you. Yep, keeping up with that reporting is vital. Here's the problem. This is kind of off sales tax, but I talk about this all the time. So many of us come to Whatnot or go to eBay or whatever it is. Yep, and that's what smart business owners do. They surround themselves with all the people who specialize in things. You get your attorney, you get your CPA, your financial advisor, or whoever, maybe a marketing person, whoever it is you need. And then you don't have to be the smartest one in the room. You just need to surround yourself with a bunch of other smart people to make your business go really well. I have worked with so many CEOs in so many different businesses. They're not CEOs because they're the smartest people in the room. They're CEOs because they know how to surround themselves with people who are experts in various areas. So don't ever think of it as a weakness that you don't know everything about everything. You're not meant to. Yep, the smartest guy. I love that. Yes. And don't forget the geek. So I was going to say something. Oh, a lot of us think when we come here that we keep our receipts and we keep our records for taxes. Taxes is secondary. Taxes is like a compliance thing you do once a year because the government says you have to do it. You should be keeping your records on a regular basis, weekly, monthly, for you as a business owner to make decisions, to know where you've been, do projections on where you're going to go. I see so many people that are like, oh yeah, do this for tax time. This is about taxes. And it's like, it's not about taxes. Taxes is like, it's great. There's things I do and I plan for taxes, but that's not why I do accounting. Accounting is to manage your business. So there's Crystal's. There's, took him a while, but he got it. He got it up there on the screen for you. So this morning we talked about strategic sourcing saves cash. This is another way that you save cash. So a resale certificate in itself isn't going to make you profitable. A resale certificate, you're not going to get rich because you're not paying sales tax. But it's a tool to add into it. We just talked about if you spend $500 a week, that for some people that's a drop in the bucket. On inventory, that's close to $2,000 savings if you're looking at an average sales tax rate. I'll take an extra $2,000 any day. So you're looking at an average between 6 and 8%. That's a good amount of money that you can buy stuff with. Every dollar that you're not spending on taxes is another dollar that you can put in your business to work for you in another way. That's pretty important. A lot of people will sit here and say, oh, I can't afford to do this. I can't afford to do that. On Whatnot, I can't afford to offer reduced shipping or max shipping. I can't afford to do a lower start, but yet they're out there paying extra on sales tax or wasting money on things that they don't need for their business. This is a huge pet peeve of mine. I'll watch. And you guys can watch it too. You can start seeing them. Go into chat shows, listen, watch the comments, hear what people are saying. And you'll hear, oh, I can't do this, I can't do this. But they're the same people spending money on unnecessary stuff and flashing it on the show. They're doing a ton of giveaways or they're doing a ton of other things. And you're like, well, that doesn't make sense, right? Think about it like this. This is a business decision that makes a lot of sense. This is, money that you're saving that you can pour into another part of your business. So some of the stuff you guys can do tonight or this week, whatever. Some of the stuff you can do before another sourcing trip. Verify, go to your state website. If you don't already have a resale certificate, go to your state website, read about it, find out, okay, what do I need to do? It's usually like a 5-minute application online. It's usually super, super simple. So go and find out what you need to do. Learn about where your state allows it to be used. Yeah, if it doesn't make dollars, it doesn't make sense. There are some things, at a base level, yes. If it doesn't make dollars, it doesn't make sense. Read about it on your state website, not just how to get it, but what does your state allow and not allow? What are the reporting requirements? Get yourself familiar with it. You don't need to be an expert. The other thing, if you already have a CPA, just call them up and say, hey, can you help me do this? They're going to charge you for it, but that's the other thing you can do. And then once you get that, either carry a digital or a printed copy with you all the time. This is really important. You can't use it if you don't have it with you. So a little bit of pre-planning, a little bit of, making sure, take a picture of it, put it in your phone. Awesome. And separate your resale inventory from your personal inventory. So we talked about that, making sure we're being honest and, having integrity and ethics in our business dealings. Keeping all receipts, making sure you're doing your bookkeeping in case you're ever audited for that. And then if you're unsure if something qualifies to use your tax exempt, just ask. Go to your state website, ask the vendor. Sometimes a vendor can help you out because a lot of times the vendors and antique stores and stuff are pretty familiar with these processes. Done. Now it's sounding like it's asking me when I'm going to be collecting tax from people, but I don't do that. Whatnot does. So here's the thing. Because you sell on Whatnot, eBay, Poshmark, all of those platforms, they take the tax for you and remit on your behalf. So you don't have to worry about it. In the state of Pennsylvania, I don't even have to report that because I'm not personally making any tax sales. I'm not collecting the tax from anybody. However, some states, even if you're not the one collecting the tax, even if Whatnot's collecting it, some states still want you to file a quarterly report and you just fill it out with zeros because Whatnot's already done that for you. They've already collected it and remitted. Where this comes into play though, what about if you go and do a like a craft fair or like one of the antique festivals where you have a booth and you're selling stuff? You are responsible to collect the sales tax then. So when you're responsible to collect the sales tax, then you're having to report that that's tax that you collected and that you have paid properly. So it all kind of fits in from the taxes you're collecting, Whatnot does it for you, and the taxes you're paying is usually all reported on one form. But it's different from state to state, so you have to really go and read yours. Pennsylvania is very different from where I used to live in Georgia, and before that, Florida. So Whatnot, yes, Whatnot collects all the sales tax on our behalf, and they remit it on our behalf. There is nothing that we need to do. And as far as I know, all the other platforms do the same thing. So when you're selling online, however, and when you're operating as in the sense of a business and you go to Facebook Marketplace and you sell your stuff on Facebook Marketplace and you go meet the guy in the police station parking lot, you should be collecting sales tax on that because you're selling it as a business. So you should be collecting the sales tax and then remitting it. So from Whatnot collects it, but when you're doing it face to face, that's your job as a business. So somebody told you that Whatnot doesn't collect the sales tax for you? They don't do anything for your state tax. I'm just reading your question now and I see you have state in there and I read it as sales. Sales tax, yes. Whatnot does the sales tax. State tax is different. State tax is based on your revenue, your net income that you make. It's just like federal tax. That's your responsibility for state tax. Sales tax, though, Whatnot handles. I hope that makes sense. I'm just going to go. Okay, good. So I do want to say that, and this is an important note, sometimes people talk about a resale certificate. You'll hear people who, they're just like, hey, somebody told me to get this and they got it. And now they're doing a chat show and talking like they're an expert on resale certificates. They talk about it like it's this big life hack or this big loophole that they've unlocked. It's really not. It's a responsibility. You're a business. You're doing something ethically. You're following rules. It's not like this loophole or this life hack. It is a business move. It is a strategic business move that you make. When you're in Pennsylvania, flea markets, most craft and such show, you are on your, yes, you, and not just in Pennsylvania, in most states, that's an honor system that you're collecting taxes. And when you're operating as a business, selling items to the public at craft fairs, flea markets and stuff, you should be doing that. Now, does the average person do it? Probably not. It's no different than how many of us press that gas pedal just a little too much and we're hitting 70 in a 60 zone. It's the same concept, right? There's a lot of people that are pushing the limits of the law, particularly when you're doing cash sales. I am not advocating for it. I'm not saying it's correct. I'm acknowledging the reality of what happens in the world. So, do you want my mug? Who did I get this from? I want to say I bought it from somebody on Whatnot. So when we collect tax at vendor events, we just save that in an account and then pay our state website for those. Yes, my love. You don't just pay your state. You need to go and register with your state ahead of time. And then there is usually a monthly or a quarterly report. Most states, it depends on the amount of money you're making on do you file monthly or quarterly. Again, every single state is different. So I'm speaking from just a knowledge of a few states. And then you have to file those reports on a regular basis on whatever cadence the state says and submit that money at that time. I just joined. Is there a dollar amount that you have to sell before you have to report it? So, Christine, the question you're asking refers to federal income tax. So for federal taxes, for your tax return that you file every single April, $400 is the threshold. You will hear people tell you $600. They are incorrect. It is $400. The IRS says $400 because that's when self-employment tax kicks in. So if you make more than $400 on Whatnot, on eBay in total, and you're reselling, that should be going on your tax return. Now, will you be paying taxes on that? Probably not. You probably have enough expenses to offset that, but it's $400 is the limit. So if we report that we make money on Whatnot, when we report it, there'll be a way to tell them Whatnot. So this is different. So this is where you guys are crossing over different types of taxes. So let's review our types of taxes really quick. We have federal income tax. That's what most people are familiar with. You file your tax return once a year in April. That's federal income tax you pay to the IRS. The next tax we have is state tax. State tax is very much like federal. It's based on your income, but that goes to the states, not the IRS. Then we have sales tax. Sales tax is the amount of money collected on each and every sale. Every state has a different sales tax rate. We looked at a bunch of different ones. On average, it's about 7.5%. That's a tax when you go and buy something and they say, okay, the item's $10, 7% tax, so now you pay the extra 7% on top of it. That's sales tax, okay? You, as a business, are required 100% to understand and remit your federal and your state tax. For your sales tax on Whatnot collects that sales tax for you. On every single sale that goes through, Whatnot collects it. They have their accountants in the background, and they remit that to the proper states on your behalf. So when you're selling online, on Whatnot, eBay, the other platforms, you don't have to worry about the sales tax side of it. However, as a business, if you take what you're doing on Whatnot and you go to a flea market or like a antique fair and you set up a booth, then it becomes your responsibility to collect and remit that sales tax. And the only way you're going to know how to do that is to go to your state website, read what they have, understand the rules, apply for that sales tax exempt certificate to keep your sales and use tax certificate so that you're reporting it correctly as a person who collects it, and then also as not having to pay it yourself when you're buying items. So we just don't report Whatnot sales. It's not Whatnot sales. Whatnot sales, the revenue is federal. You do have to report that. The tax Whatnot collects on those sales, you don't have to worry about. So if you make a sale, so Miranda, you're selling something, you sell it for $10. That $10 is revenue to you. That's money that ultimately, if it exceeds $400 by the end of the year, you need to report on your tax forms. When you make that sale to your buyer, Whatnot's going to charge them sales tax. They say, okay, buyer, you're going to pay $10 for the item. You're going to pay, I'm just going to say $1 for sales tax, and you're going to pay your $9 for shipping. Whatnot then takes that sales tax dollar and handles that on your behalf. But that $10 that you made is federal. K-Pot. Whatnot will issue you a 1099 if you make more than $20,000 in sales and 200 transactions. So Whatnot doesn't need to issue you a 1099 until you hit that 20,000 threshold. That does not mean you don't report your income. You as a business are still required to report it if it's $400 or more. It doesn't, just because you don't make 20,000 doesn't relieve your reporting requirements. I got it. Thank you. Whatnot has just a different threshold and when they have to issue you a tax form. This is why it's important to keep your records. Exactly. This is exactly why it's important to keep your records. Is there a way on Whatnot to see what we've made to report? Absolutely, Miranda. So you should be actually recording your sales and all of your expenses at a minimum on a monthly basis. You, as of right now, where are we? We're almost in August. You should already know for the first 6 months of this year how much money you've made. If you're doing proper bookkeeping going along, as a business, we should. So on Whatnot, there's a couple different ways. Christine, normally we broadcast, is this? Oh, it is. Yes, this is going to be on YouTube. We had some trouble at the beginning for YouTube, but it's working now. Additionally, I'm going to talk about a way to get the notes. So where can you go on Whatnot to see the money you've made? If you go on a computer, you're in your Seller Hub, and there's a section that says Finances. Click on Finance, and from there, you get some reporting. You can do a weekly report, and that's like an Excel or a CSV file that you can download, and it'll list out everything that happened that week for you. Or on the 4th of every single month, they release your monthly report. So the 4th of August, your report for July will be ready, and that will tell you your total sales, how much you paid in shipping, how much you paid in fees, and a few other things on that monthly report. Miranda, if anybody here needs to learn how to do the accounting for yourself, for your own business, I do have an accounting course. It's in the bin. It is called... I used to name it Ledger to Leadership, but it actually comes with a book, and you get 12. It's the complete reseller accounting course, and you get a 12-chapter book, and along with that, you get access to 12 Whatnot shows that we have on YouTube in a private folder. that go through one chapter at a time and teaches you everything you need to know about accounting as a reseller. So what if we source constantly but don't sell right away? So if you're sourcing, you're buying inventory. So when you're sourcing, you're taking cash and you're trading your cash for another asset, for inventory. So that right then, right then, you buy it and it sits on your shelf. That's not an expense to you. That's inventory. It's an asset. It's something you own. Then when you sell that item, when you sell something, that item becomes cost of goods sold. That's the expense that you would then record in your books. So I'm hoping that kind of makes sense. So you can source all you want. The IRS almost doesn't care how much you source. What they're looking at is your net profit at the end of the year. They're looking at that net profit. So you get revenue. You make all these sales. You have all this money up here, right? And then as you sell stuff, you get to subtract the cost of those items that you sold, the cost of goods. Now you have gross profit. After that, you get to deduct all the other expenses, your shipping supplies, your home office, your cell phone, to get down to your net profit. That net profit at the end of the day is what the IRS is looking at, that you're paying your federal taxes on, your state taxes on, your self-employment taxes on, is all on that net profit. Keep the receipts. You record them on a regular basis. I'm just going to tell you guys the easiest thing you can do. If you're like, look, I'm just starting out, I can't afford a CPA right now. I need to figure out a way to keep my books myself, but I need it to be super easy. This is what you do. You get a few pieces of paper, maybe a spiral bound notebook. Paper and in a binder. That's all you have to do. And on the first piece of paper, you write revenue, my sales. Every single time you earn money, you put the date, what you sold, like, hey, I did a Whatnot show on this date, I made $1,000, whatever it is. You have a page for revenue. Have a page for every type of expense you have. Shipping supplies, cell phone, whatever it may be. And just keep track on pencil and paper. At the bare minimum, at least you're keeping track. You can look through that and do some analytics and pull those numbers together to get a good idea as a business owner. That's like the most basic way to do it. If you pay at garage sales, rummage sales, no receipt, keep a logbook. That's all you have to do, is keep any type of a logbook. The word the IRS uses, I can never say it right, contemporaneously, which means basically as you go. So every time you're shopping, have some type of a book. You put the date, a short description of what you bought. Vintage decor, on this date, I spent this dollar amount. That's all you need to do. Is it okay if we don't keep track of what we paid and sold each item for? Seems like a lot. You do not have to keep track item by item. You can do them in totals. So when you're looking at your inventory, there's 4 things you need to know for your inventory. What was your starting inventory? So on January 1st of 2026, how much inventory did you have? If you just started your business, that number should be 0. Okay. Then you need in total, how much came in? How much purchases? How much stuff did you buy, right? So what did you spend on everything that you bought for your inventory? That's your additions. Then you need how much did you sell? That one, though, that's the tricky one. So just put that one to the side for a second. Then at the end is what's left. So it's a simple math formula. What did I start with? What did I add to my inventory? What did I subtract from my inventory? What did I went out equals my ending inventory. The part people mess up on is what did I sell? That's where we're not keeping detailed records, and that's okay. Because if you know what you started with, you know what you added, and if you know what's sitting on your shelf right now, then all you have to do is back into that number of what you sold. So right now, if you were to go look in your storage, wherever you store your inventory, you should be able to add up that inventory and say, okay, I have $1,000 worth of inventory on my shelf. Well, now you have the ending. You know your beginning. You know what you bought because of your receipts, and you know your ending. You can do a math formula to figure out what you sold. What if we're just selling items we have laying around the house? So if you're selling your personal items, you need to assign a cost to those, either directly related to actually what you paid, if you know what you paid. If you do not know exactly what you paid, the safest and most conservative way to assign a cost is to use a thrift store value. So if you sold a t-shirt, you cleaned out your closet and you're like, I bought that t-shirt 20 years ago, I have no idea what I paid. What can you go to Goodwill and buy a t-shirt for? What can you go to your local Goodwill? If it's $2.99, then assign the value of that as $2.99. That's what you would use. Because at one point you paid something for it. But if you don't know what you paid, you have to come up with a price that's very conservative. That way, if you ever were to be audited by the IRS, they'll say, well, how did you come up with this price? You don't just say, oh, I just guessed t-shirts are worth $10. No, you have a basis for it. You have some meat that you can say, well, I figured $2.99 was a reasonable price because that's what they're selling for at the local Goodwill. That's usually sufficient for the IRS. Now, you're not going to do this for all of your inventory. This is only for those items that you have around your house, right? So it's a very small, limited amount of stuff, usually only when you're beginning, because after that point, you're going out and you're buying stuff. Does it work the same for items from your parents' estate? So when we start getting into estates, it becomes a little bit different. If the items were left to you through a will or through a trust of some sort, like it's an actual, they have passed away, there's an estate set up, and those items are then willed to you, there's usually a step up in basis. It starts to get a little more complicated. So the value of that is not what your parents paid. It's now more of a current resale value because of that step up in basis, which applies to certain types of assets. The other thing kind of with that, if there wasn't necessarily like a legal transfer of those items and it was just like, grandma's getting old, she wants to get rid of her stuff and grandma just gives you things, or mom and dad are like, hey, we're downsizing, I was going to dump off all this stuff to you, then that's zero basis. You have zero cost in that because that's like it was just a gift to you. So that's when you need a CPA and possibly an attorney to help you start to figure that out, depending if it's an actual like legal estate or trust or something that it's coming through versus you got it as a gift. So in those cases, you're starting getting into the nitty gritty of the tax code and estate law. If you buy out an estate sale, one lump price, how do you come up with the cost of items in that sale? I wouldn't care about the cost of the individual items. It would be as a whole. So think about it like this. We're going to say, to make this make sense, all of those items fit in this big old box, okay? You bought out the estate sale, you got this huge box, all these items are in there, you pay $10,000. That box is worth $10,000, everything in there. I'm not going to count all those items. I don't have the time nor the patience to do that. It's not worth it. But what I'm going to do is I'm going to be able to identify that in a certain way, either putting them all together, writing some type of note. In my accounting records, estate buyout, $10,000 of inventory is my accounting entry. And then in my physical inventory, they're all going to go in the same place or on the same shelf. I'm going to be able to identify that in some manner. Come the end of the year, I'm going to go and look and I'm going to do my physical inventory count. And in that big box, if I still have half a box, then I know I've sold 50% of that box. I've sold half of it. So my cost of goods would be 50% of my $10,000. It's $5,000. That's a totally acceptable way to account for your large purchases like that. No legal, just stuff from the houses. I would consider those gifts. If they were then just given to you, if they were mom and dad's and given to you, that would just be a gift. That you have zero basis in that. Because in that case, that's no different than your sister showing up saying, hey, I have this shirt, I don't wear it. Here, take it, and why don't you sell it in your stuff? Like, okay, thank you, sister. It's zero basis. It's just a gift. So you have zero cost to write off. So that means all that revenue is 100%. There's no expense to write off for cost of goods on those items that were given to you as a gift. I hope, what is it, Kiku's? Am I saying that right? I hope that makes sense about how to account for stuff in lump sum. This is how I do mine. I don't buy out estates. I'm not at that point yet, but that's how I do mine. I went to the antique store today. I got a bunch of stuff. It's one accounting entry, the total price of what I paid. And then I'll know when I sell it, I've spent this much money out of it by what's left. Do I use goodwill value on it? Deb, you wouldn't use anything on that. Since that was a gift, since that's not something you purchased yourself, you didn't put money out for it, that's zero. It's just inventory. You were given something, the cost is zero to you. It's like, great, I just have some free stuff to sell, so when I sell it, 100% of that is profit. So there's a good and bad to that. The good is 100% of that's profit. The bad is 100% of that's profit. Means that there's no expenses to offset the cost of that. If you guys have any other questions, feel free to ask. We're kind of wrapping up the sales tax side of it. So we're just talking about the importance of sales tax, getting your resale certificate. It can actually save you a considerable amount of money. The majority at auctions. Auctions are great places. I do a lot of my shopping at auctions too. Can say the inventory equipment. Sure. So for your inventory, there's 4 things. It's the simplest formula ever. What you started with, and I may be going backwards. I can't tell on the camera. What you started with. So what's your beginning inventory? Your beginning inventory, if you just started, is 0, or go look at last year's tax return. It is something that is on your tax return. So your beginning inventory plus your purchases. So add up all your receipts plus your purchases of things you bought to sell minus what you sold equals your ending inventory. That ending inventory number, when you're writing out this formula and you're looking at your receipts and you're figuring it out, that ending should match if you were to go into your storage area and add up the price you paid for all of those items. That's your ending inventory. Would it be better to pay a small amount? It doesn't matter. I wouldn't. If you don't have to pay for it, I wouldn't. I mean, when I was kind of joking when I said it's the good and the bad, that it's 100% profit. No, if it's a gift, it just means I'm going to make more money on it. At the end of the day, look, people think, oh, I've got to pay taxes. It's terrible. You know what? Taxes in itself are a blessing. I know you're thinking I'm crazy, but they really are. You do not pay taxes if you don't make money. The reason you pay taxes is because you made money. Why are you in business? To make money. Therefore, if I accomplish my goal as a business owner to make money, I will then owe taxes. It's part of the expectation of owning a business. And I look at it as it's a blessing. It's no different than shipping. We bitch and moan about shipping like, oh, I really don't want to do this shipping. That's probably like my least favorite part of this, right? The only reason I'm shipping is because I made sales. It's a good thing. Now, when we talk about taxes, no, I don't need that. When we talk about taxes, at the January 1st, the beginning of your year, right? Your net profit, that's what you're taxed on, is like this. It's at 0, okay? As you go through the year as a business, you want to make as much money as you can, right? Who here is like, yep, I want to make as much money. That's what we all want. So we want our book profit, our book money in our bank to be way up here. But then comes tax time. We look at this profit up here and we're like, oh shit, I don't want to pay taxes on all that money. So our goal is to get our tax profit way down here so we're paying the least amount of taxes. There are legal ways to do that, part of which is keeping track of your expenses, taking advantage of the deductions that the IRS offers you, such as home office deduction, mileage, and some of those other ones. Paying your children is another way to reduce it. There are certain things in putting money into retirement accounts reduces your taxable income. So there are ways when you have all this profit to actually lower what you're paying in taxes legally. Does Whatnot have any accounting programs that will link up to help? No, I already read that one. Does Whatnot have any accounting programs that will link up to help you? Whatnot doesn't, but there are accounting programs out there that interface with Whatnot. QuickBooks does. Reseller Genie does. To my knowledge, Reseller Genie, those are like the top 2. I am sure there are other programs, I'm just not very familiar with them, that you can export or have some type of link to into Whatnot, where it'll pull that information in. Reseller Genie is good. And I think the person who did it is actually a Whatnot seller who made Reseller Genie. I've heard good and bad about all of them. I don't recommend anyone over the other. I say use what works best for you. I do know a limitation on QuickBooks because I did use QuickBooks. I've gone back to Excel. Excel works perfect for me. When I was using QuickBooks, one of the limitations was for the price I was paying for my monthly subscription, it only linked to one platform. So I had it linked to a different platform, not Whatnot. So that was a limitation of QuickBooks. I think if you pay more for the subscription, you can get it links to other things. So when you're looking at software, think about those type of things. Like look at those. Does it link to multiple platforms? If you're selling on multiple platforms, that'd be something to take into consideration before you invest in one. But most people, I would say the majority, could get by with spreadsheets or pencil and paper. It depends how much reporting you want and how familiar you are with it. But there's no requirement to have something fancy. Use what's going to work for you. Any other questions? We talked about a whole lot of things tonight. So we do have, let me tell you about, so my notes, one of the new things we are doing is I do the business shows 7 a.m. on Fridays, and then we do tax at 7 p.m. I am starting to have my notes typed, and they will be in our library. So we are going to be putting our notes starting today from this morning show and this evening show into our library. So that is the book one. Hold on, let me find the right one. I'll show you where it's at. He's got it. My husband will pin it there. So moving forward for the rest of the year, we'll be having all of our notes in there. When you buy it, you get access to all of the guides that are already there, plus ongoing anything we add, which includes our show notes. And then the shows are also on YouTube, so you can take the notes and you can look at the notes and kind of match them up for the more in-depth verbal explanations. I have thousands of pieces of jewelry I bought before I started on Whatnot. Where do I start inventory and cost? This was before. How much before? Because this is kind of a gray area with the IRS. So like how much are we talking before? Like a couple of months? Are we talking years ago? Because my answer is going to differ depending on what you say to that. So I'll do both answers. That in case anybody else is like, hey, that sounds familiar. 2 years to a few months ago. Okay, so 2 years, what I would do, since it's so far, like since there's so much time, what I would do, hopefully you have receipts. If you have the receipts, I would gather all those receipts, add them together and say, this is my starting inventory. So if I went into business on January 1st, 2026, this is the inventory that I'm investing as the owner of this business. And that is your starting inventory number. The offsetting side of that, because anytime you do an accounting entry, there's two sides, would be owner investment. All of my adult life collecting everything. This is a real question. Okay, so if you have receipts, so pitter pause, I'm thinking, okay, within 2 years, you probably have receipts. You probably know what you bought. You consider that an owner investment. That becomes your starting inventory. If it's stuff that you have just accumulated, like Old River Trading Company, over your whole lifetime, and you're like, okay, I'm cleaning out everything. I'm going to gather all these personal belongings, personal jewelry, and start to sell it. Again, it's the same thing. You would consider that an owner investment, but the way you would value it if you don't have receipts is either, okay, I know for sure I paid this much for that. If you're not 100% exact and can't back it up, use a thrift store value. That's when then you're going to the thrift store value to justify the cost of that. So whatever that item is, if you were to go to a thrift store, or maybe for jewelry and maybe a pawn shop, something reasonable, not excessive. You want to be conservative when you're doing those estimates to get a value, and that would be your beginning inventory. That would be what you would start with. I can probably get everything was bought via eBay. So there, yeah. A lot of this stuff, particularly if it's in the last 2 years, you can look at credit cards, bank statements. You can recreate a lot of it. Are you going to miss something here or there? Probably. M&B Vintage, thank you so much for that raid.
Welcome in, Raiders. Glad you can join us on this business and tax discussion.
MMB Vintage, thank you for bringing your friends over. Everybody, my name's Tracy. This is Zoe's Treasures. We are doing a tax talk. We're just answering questions at this point. We were talking about sales tax. MMB, please put in there who you are, what you sell, when you sell it, where everybody can find you. Give us all those details so that people can click on your name and follow you. Thank you so much for coming over. If you guys have any questions, thank you. I hope your show was wonderful. If you guys have any questions, feel free to put them in there. Any tax, accounting type questions kind of is what our focus tonight. We were talking about how to value inventory. If you have been collecting your whole life, if you're a clothing seller and you're like, I'm going to start by cleaning out my closet, what's the value of that? How do I figure out what the value is? So that's what we were talking about. Now the other side of that, so the Pitter Paws asked, okay, I bought stuff within 2 years. Here's the other side of it. Some people, it's very common to where you come on Whatnot, you spend a month or two and you're buying, and then all of a sudden you're like, man, I got a lot of stuff. I think I'm going to be a seller. So maybe you've been buying for 2 or 3 months, a short time frame before you actually go into business. Just take that and you assume I've got these receipts. That's going to be your first outlay, your first expense as your business. If it's within a short time period, we just assume that was a business expense, and we go ahead and record it on our books as such. When it goes back years, then we kind of start looking at it a little bit differently. And then the other thing to keep in mind, and I know we've kind of gone off course to inventory, but the other thing to keep in mind with your inventory is it doesn't become an expense until you sell it. Okay? This is the big one that people miss. You'll hear people say all the time, well, just write it off. Your inventory is an expense. You can buy anything, just write it off. That's not really true. Your inventory becomes an expense when you sell it. This is why we all talk about don't buy that inventory. That's money sitting on a shelf. How long are you going to have money sitting on the shelf? Sell that stuff. This is why you hear people saying, I don't want to hold on to it for a year because it's not doing anything for you. So keeping that in the back of your mind. Now you will hear there's what's called the cash method that people say, oh, well, my accountant says I can write off all my inventory. Come tax time, during when you're filling out your Schedule C, you have two methods. Just what you sold is cost of goods, or you can do the cash method where everything you bought is an expense. I highly, highly warn people, do not jump into doing cash method. It can come back to bite you in the butt. There is legitimate times when you should do that, and a lot of times when you should not. That is where a good tax person will help plan and advise on the best way to handle it. Because what you do in 1 year is then going to follow you and affect you in multiple years after that. So don't, and I say this kind of tongue in cheek, don't take tax advice from people on Whatnot. I say that very tongue in cheek, unless you know that they're qualified to do so. Even then, always go back to your tax person and say, hey, I heard this. How does it apply to me? Because I'm a CPA. I feel very qualified to give general tax advice. General being the key word here. I'm going to tell you what the IRS says. I'm going to tell you best practices. But every single person in this room has a unique set of facts and circumstances that is going to affect you different than the guy next to you, the name above or below you. So always, always go back to your tax person to make sure that they're looking at your big picture. I have several paid storage units, and I paid cash for 6 large storage sheds. Okay, so all of that is tax deductible. I'm storing my things for sale. I do have, yes, you can, absolutely. So, I have several I have paid cash for 6 large sheds. Okay, when I'm reading it, I'm reading that as you purchased these sheds outright. Like you went to one of the shed places, threw out a couple of $1,000s, and you purchased the sheds, and they're sitting on a piece of property somewhere. Okay, that we are now starting to cross the line into what we call fixed assets. Let me try to explain this the most straightforward way I can. When you buy a piece of equipment, The IRS says they have what they call a safe harbor law. The IRS says if that equipment is under $2,500, you can expense it. It's a supply. If I buy a iPad and it's $1,000, I can expense that. That's tax deductible. That $1,000 comes off of my profit. I don't pay tax on that, right? However, once you hit that over that $2,500, and there's some other special rules here, but I'm talking generalities. Once you hit over that $2,500, that becomes a depreciable asset. It's a fixed asset. That means you can't just take the cost of that shed. Let's just say you spent $3,000 on a shed. You can't just take that $3,000 and write it off. You can't just take that whole $3,000, because once it becomes a fixed asset, a depreciable property, you can only take a piece of the expense to match up with the use of that item. So what does that mean? That means that you expect that item, it's over $2,500, and you expect that item to last more than a year. A shed would fall into that. Sheds, I would say, would last 5 to 7 years. And the IRS actually has a chart that says computers last this long, automobiles last this long, real estate is this long. So they have guides on different types of depreciable assets. Let's say 5 years for a shed. You would take that $3,000 and divide it by 5, and then whatever that number is how much you can then deduct on an annual basis for each year of those 5 years. That's depreciable property. So when you start getting into larger purchases of items that are going to last for longer than a year and cost over $2,500, they're not immediately deductible. You have to take it over the life of that asset. As with anything, I don't want to get too far into the weeds because people just like their eyes glaze over and they tune out. But as with anything with the IRS, there's always special circumstances. And with the property, like I just explained, there's what's called Section 179, which is a special rule that does allow you to write it all off. This is where you need a tax planner. This is where you need somebody to come in and look at your big picture and say, this makes sense to use Section 179, or no, it doesn't. I can't tell you that here without knowing your full big picture, and that's not something you're going to put in the chat or should be telling me anyways. But that's just some things that you can be like, okay, I heard about this. I heard about depreciable assets in Section 179. Now let me go talk to my tax person and have them look at all of my picture and tell me what's best for me. Cool. Got it. All right. I know sometimes just because the accounting language, the IRS language comes very natural to me because that's my life. That's what I've lived in my professional life for so long that I'll start to say something and my husband's like, you're so deep in the weeds, like get out. So I try to talk a little bit more, not so deep in the weeds, general. As I can pretty much guess that y'all aren't like opening the IRS tax code to read as, for fun on a Friday night. Are there any other questions before we go and rate? I spend $2,000 on a box trailer to store inventory in my own property. Only use for that. So I can, you can, Mary, you could take the whole $2,000. So when we're talking about that $2,500 limit, I am in Eastern. I'm in Pennsylvania, so it's Eastern time zone. When we're talking about that $2,000, every company actually can write their own policy. So you'll have there'll be people out there that say, no, the company I work for, it's $500. Everything over $500 is the limit. The IRS allows every company to have a written policy and decide their threshold for when you have to depreciate property. But in lieu of having a written policy, which most people on Whatnot do not have a written policy, they allow $2,500 to be like, here, they call it the safe harbor. Here's the safe number that you can use. The IRS gives you and says, look, I know not everybody, the IRS says, everybody's not going to write this policy. So if you stay within this number, you're okay. That's what when you hear anything that says IRS safe harbor, that's what it means. It's a general rule. For people like us in business that are like small business owners that we don't have these huge accounting departments for working for us. You guys, we're going to keep doing it. I'm here every Friday night. If you're new to me, I understand it gives me enough info. Yeah. And Exactly, and Old River, and that's what I hope to do here, is just to give enough to where it's like, hey, this is something to think about. Let me go look at my tax return. Let me go talk to my tax person, and that's all we really need to have, right? Is just enough to be able to have a discussion about it. Is there a way to get notifications for only your shows so my battery doesn't die? For only my shows, you can. I'm gonna pin our back. My husband will pin our back call if you like. You don't have to buy this. Just like it, like bookmark it. And anytime I do a chat show, this is the one that I pin up there. But you don't have to buy it. You can just bookmark it. Is it, PA meetup? I'm so glad you asked me. You guys, we are doing a Pennsylvania meetup. If you are anywhere in the area or you just like to travel, October 3rd in Harrisburg, Pennsylvania. We are doing a meetup from 9 o'clock in the morning till 3 in the afternoon. We have some amazing speakers. We have another speaker that we just added today. I'm not going to make the announcement yet because I need to talk to our other people about it first. But a potential, I'm pretty sure we have another really cool speaker. But so far we have myself, Jeremy from Green 13, and I Love Discounts and Dragonfly Neen are all going to be speaking. We're going to have some breakout workshops. We're going to have some networking. Your ticket price includes a continental breakfast and a lunch and admittance. Will that be on YouTube? We are working on that. We will be doing some type of broadcasting, but we're going to have multiple sessions going on at the same time. So we probably won't be able to broadcast multiple at the same time. So that's a yes and a no question. Some of it will be on, some of it won't. Tickets close as soon as they're sold out. However many it says we have. We have 44 available. So as soon as those are gone, they're gone because we have limited space at the venue. It holds 125. I have 44. Green 13 has some. I do not know how many he has left. He was given like 25 to sell. I don't know where he is on selling those right now. So whenever they sell out or around the middle of September, whichever comes first. And I suggest if you guys are interested, they're always in my bin, but I do free shipping on Tuesdays and Fridays. And that's probably the best time to buy them, is a Tuesday or a Friday, because then you don't have to pay for the $4 that, because they're over the 20, it charges the $4 for something to ship. So just trying to save you a couple of bucks in that. But it's at an old fire station. It's going to be really cool. We have close to 70 people coming right now, which is amazing. Or just over 60, somewhere between 60 and 70 once I get with Jeremy and find out what his are. So we already have a good crowd coming. We have some big names that are going to be there, some really great speakers. So it's educational, it's networking, it's meeting other sellers. We so far have people coming, I know, from like Kentucky area, some other, where too, like Tennessee. So we have quite a few people like coming up from various areas. And it is open to anybody over 13 needs a ticket. It's open to buyers and sellers. And it is also open to people on other platforms. So while most of us, our main platform is Whatnot, it is also open to eBay sellers, or if they're on District or wherever else. We are not excluding anybody from the meetup because it is a reseller meetup. So not sponsored by Whatnot. That's the other side of it. It is not sponsored by Whatnot. It is a few of us got together and said, we want to do this. And we got a location and are working on getting caterers and planning it all out. So it's going to be a good event, I can guarantee you. So, free shipping is on Fridays and Tuesdays. Any other time, you'll have to pay the cost with it, the shipping cost with them. And there you go. It is on my website, zoestreasures.com. That link will bring you right back to Whatnot. So right there where it says buy tickets, scroll down. If you click there on my website, it's going to bring you right to Whatnot. Whatnot's the only places. I'm about an hour south of Harrisburg. So that's why we're having it there. Because there is a train station, there's an airport, and there's hotels near there. So that's why we picked Harrisburg. But everybody who's speaking, they're linked there on my website. So if you're not sure who I Love Discounts or Green 13 is or Dragonfly Neen, you can always go and see who they are. It's going to be cool, you guys. Like Southern Charm, I cannot wait to. I'm starting to get excited. I'm at the point now where I'm arranging help to like set up tables and do all that. So I'm arranging like the event staff to take care of things, and it's gonna be a good one. We're solidifying actual schedules right now, so I'm talking with everybody involved to solidify the actual time frames, who's in what rooms speaking, what are the topics. So all of that's kind of getting pulled together. The other thing on my website, if you're like, okay, I'm just not sure, you can. Thank you, Southern Charm. I appreciate that. The other thing, you can just give me your email on my website and be notified. Like when we solidify the schedule, I'll send out one email saying, hey, here's our schedule for the day. So that's another option too. If you just want to be in the know but aren't quite ready, that's a way to be in the know. Is there a hotel? People say I may drive. So there's not a specific hotel, but when you buy a ticket, we give you, here it is. I have it down here. When you buy the ticket, you actually get a ticket. We have real tickets we send out, but we also send out 3 pages of information. And on there, we have an area that talks about transportation. And somewhere we have, we give you some suggestions of nearby hotels. So we're not contracted. We're not like getting blocks of rooms or anything like that. But we just gave like some local information just to make it easier for the people that are traveling. So you get all of that when you buy your ticket to start planning your trip. The other thing we're doing too on there, and I can't guarantee, but I am doing my best, is one of the pieces of information is if you have certain type of food allergies, since we are offering food, you just let me know and we'll try to accommodate the best we can. I'm not the food person, but I am hiring caterers, so we will do the best we can. All right, you guys, I think we're going to raid. Don't forget tomorrow morning, 8 a.m., primitives, all that back there if you like primitives. Can I print the workbook? The PDFs you can, but some of them are voluminous. So there's a lot of pages, but yes, they are printable. They're in PDF form, so you can print them. All right, let's go see who's on. Who is on to raid? Are you picking or am I picking? Okay, we're going to go see Abandoned Treasures. Y'all, I hope you guys come back. Thank you for hanging out tonight. I really appreciate you guys coming in, asking questions. This would be a pretty boring show if I just had to, like talk to myself all day or all night. So I appreciate all of you. Let's go check out Abandoned Treasures. This is a great mother and son team. All right, am I doing? Okay, I got it here. Thank you so much. I appreciate you guys. Okay, do the raid. My love. Let's go. Y'all throw some ducks in the chat when we get there.